Quant records biggest whale transaction in 16 months. Gala is jumping a 9-week high as the company announces new developments including incorporating mobile gaming. Fed net assets print a new low last week. AVAX is seeing some price pressure as Grayscale dumps avalanche from large cap fund. Hello, everybody, and welcome to the Assets of Value podcast. Today, on 9th of January, and every day, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We're the founders of Assets of Value, a Web3 research organization. Our podcasts are not to be taken as legal or financial advice. Let's jump straight into it. Abe, on this Monday, a new week, kick us off, man.
A new week, a new pump, a new weekly high for Bitcoin. I think Bitcoin has escaped the cat's prison and is trading around 17.2k right now. We should remember that Bitcoin was trading around 16.8k forever. The last week, the week before that, last day, and finally, Bitcoin has broken down that 17k resistance and retested it. I think this is a big opportunity for altcoins because Bitcoin dominance has started going down from 41.6% to less than 40%. And the 1% change indicates that altcoins can pump 5 times than Bitcoin. This is amazing for low cap coins because they can pump 20 times. All these are very good investment opportunities, but there are a lot of concerns with respect to the macro environment. So we'll come to that later.
Certainly green across the board as we kick in this new week. It's nice to see Solana gathering some momentum to the upside. That's one of the biggest gainers at almost a 20% gain today, trading back above $15 and currently right now $16.41. Zilliqa as well has seen a 47% increase of the day. That's a huge increase. But the biggest gainer of them all is Gala. That's now over 4 cents. And it's really bullish. And that's a 63% increase just this month alone. We are into the second week of this calendar year. And with a 56 increase just today, that's pretty amazing. When the bulls are back, they really gather strong momentum behind them. We also saw Quant taking some headlines as well, as QNT, the ticker for Quant, is recording the biggest whale transaction in the past 16 months. What is that all about?
A week before, Schwab, I think you remember, we discussed about possible trends and narratives for 2023. And the biggest narrative was adoption of Bitcoin and adoption of CBDCs, that's central bank digital currencies. With the beginning of a new year, all these nations are jumping into crypto to start legalizing Bitcoin or to start a new central bank digital currency. When you hear the word CBDCs trending in the crypto space, that means good times are coming for Quant because Quant's overledger is the single most powerful technology that can enable instant deployment of CBDCs into the Web3 space. So this is all a narrative, right? Whales try to be smart, whales try to be first, and whales always win. So they are accumulating Quant in anticipation of a CBDC trend, which occurred last year also. When that occurred, Quant went from $50 to more than $150. That's a 3x gain in less than a month. Quant is trading around $100 right now, to be exact, $111. And can Quant reach back its all time high of $400? That remains to be seen. Although I think Quant is up for some pretty juicy gains. Non financial advice, as always.
Gala is also pumping. That's in a completely different vertical and space to where Quant operates in. What's the story behind Gala and its positive price action that we're seeing?
Gala as a gaming ecosystem is pretty good. They are well known for their marketing capabilities and partnership capabilities. Gala delivered its first product as a Gala Node system and it has been rewarding its customers pretty cool, pretty nicely. And the second product Gala delivered was its gaming ecosystem, starting from Townstar, and there are currently 4 games in development and another 4 in the market. The most important thing is all these games have interchangeable NFTs so that you can buy them from the Gala store itself. But the recent hike for Gala is related to its launch of mobile games. So Gala is planning to launch mobile games and all these games will be supporting a Web3 ecosystem game. That means blockchain games are coming to mobile. We have seen this with Killbox, but it was an ordinary Web2 game with a token in Web3 ecosystem. But Gala is proposing a fully Web3 compatible game into a mobile. That's amazing. That can fuel real world adoption of Gala ecosystem.
If Gala is coming out with a Web3 native game, does that need a new operating system or can it run in the current technology that we currently have? We know that Solana is building a Web3 enabled phone, native Web3 enabled phone with security keys embedded inside so that the whole onboarding process, interaction, and transaction across different wallets and services is all inherently built in. Is Gala going with a phone manufacturer or is it just committing to build on top of the text that exists in Web 2 and then put in new or Web3 technologies behind there?
Solana's approach to attract new people or new investors to Web3 was totally different. Firstly, Solana offered Solana Pay, which failed. Secondly, Solana offered a phone which was supposed to launch in 2023 Q1, but I doubt whether it will happen due to ongoing situation of Solana. Solana is not dead. It won't be dead because the developer base is strong. The community is still there, although some major blue chip NFTs are moving to other chains. But the most important factor is that Gala is not building an infrastructure to promote their ecosystem. They are choosing the easy way, and we know that easy way is the best way to transgress into other ecosystems.
I have to agree. And coming back to Gala and the positive sentiment around the ecosystem and the token itself, they've recently tweeted a partnership with movie stars Dwayne The Rock Johnson and Mark Wahlberg to Gala Film and Gala Music. And we've obviously seen that price pump on the back of that announcement that happened on Sunday. It was tweeted out from the official account. Really positive and bullish news around Gala. Great to see. Let's switch gears and talk a little bit about the Fed. So, at the tail end of last week, Fed net assets, which is usually a proxy for liquidity, it actually printed a new low. This is the largest drawdown liquidity since earlier in the year in April 22. And the last three times that this data point printed a new low, we saw SPX print a new low shortly after. So, what can we expect with the Fed net assets and the macro outlook and the repercussions that it could possibly have?
First of all, although this might sound like a FUD, that last three times the liquidity, aka Fed net assets, dipped, the market, especially the Web2 market, dipped along. This happens in a bear market and it's not something new. For our viewers who are wondering what's Fed net asset and what it has to do with Bitcoin or cryptocurrencies. Firstly, cryptos or Bitcoin is not directly impacted by Fed's policies, yet Fed's policies impact or affect stocks, S&P 500, and that in turn affects traders and their sentiment, which obviously come into Bitcoin and other cryptocurrencies. So, what are these liquidity facilities? That means assets. These can be credits, for example, it can be primary credit or secondary credit, or the seasonal credits or dealer credits. Or this can be funds like mutual funds, liquidity funds, term asset funds. And all of these facilities, all of these assets that Fed holds determine its net volume or net liquidity. Imagine when Fed is trying to remove its liquidity, it's betting on cash. It's betting that all these credit facilities will be underperforming cash. That sends a message to investors that holding cash at this point is better than holding a risky investment. So, this is it all about. And we might probably see another drawdown for Bitcoin. I'm not suggesting a bloodbath, but a quick drawdown, perhaps in the later stages of January.
Before we close out, so this recent price action pump, it is setting or on the way to breaking trend lines from a technical analysis perspective. How long do you anticipate the continual rise of the current price action? We know that the Fed net assets from a macro perspective still look pretty abysmal, but yet trader sentiment and price action is showing or behaving the opposite direction. This price bump, is it just a short term thing, or do we think that it could go into February and then into the Q1 of 2023?
The current market situation is favorable for Bitcoin and altcoins. The series of short liquidations in all the exchanges, that means exchanges are making money. When exchanges make money, VCs make money. When VCs make money, they invest in crypto. They spend money on advertising, they spend money on hiring, and this creates a positive ripple effect in crypto. But the current pump, it's more related to Bitcoin getting trapped into a certain trading zone for too long and it just tries to break out. When it fails, we call it a fake out and it just returns to normalcy. That means when your altcoin pumps 30% a day, you should be able to take profits. I feel that Bitcoin can go up to 18K, just retouch the December levels and go straight back to 16K or 16.5K. Although it's not so far, we have seen 20K or 21K Bitcoin. It was just 2 months ago in November. Can we retouch November 2022 levels? Of course, we can if we have enough momentum from the Web2 world. But unfortunately, the Fed's action signals a short term downtrend for Bitcoin, although it could be delayed for maybe another 2 weeks.
Excellent. Let's leave it there. So, a timely notice, warning, advice. If you are in profit and you are trading, do take your profits, bank those in because this cycle isn't over. And we do get the good occasional pump every so often. A nice one to kick us off on Monday, the start of the week. It's been super fun as always. I'm glad you were able to jam with us today. That's it. Until next time. Thanks, everybody. We're signing off.